Hey everyone, George here with Forex Cash Builder. Just want to go over some very slight changes that I made to the writing the trend template, and also want to go over with you on what I look at when I'm using the template to trade, and how you can use it to maximize profits, and no bad luck to also minimize the drawdowns as well. Okay. Before I begin, I do apologize for the way I sound or anything. I have got like a stuffy nose that I think may be trying to turn into a head cold or something. So if I sound a lot different than I normally do, that's the reason for it. And again, I apologize in advance. Okay. So the first thing that I want to go over is the main change that I know I made. The multi-variation strength indicator that used to sit right here and stuff. I got rid of it. The reason for it is because the number that was on the top was like your strength meter, but it really stayed right in line with whatever the number was in here. So since you already had this one that works on whatever time frame you're on, and then you also had this one up here for the multi time frames and stuff, there was no need to have this one really. If you do still have it and you want to keep it. If not, you can feel free to delete it off and everything. Um, and I'll pull up the indicator window later towards the end of the video to show you exactly which ones I do still have. But I do believe that is the only change that I made to the writing the trend template. If not, feel free to let me know, and I will let you know why I got rid of something else if I did. But as far as I know, everything else is still the same. I know I've been playing around a lot with it because I've been trying my best to get it as simple and user friendly, non computer dragging down as much as can. Okay, but this template right here is definitely one that I'm going to be utilizing from here on out. And once I get done with the video, I'm sure you agree with me that it's one of the better ones that I have created over the last year or so. So, the main indicator that you're going to be utilizing in the template, if you're not familiar with this template, is what's known as the TDI indicator. That's this big indicator right here. Okay, it almost kind of looks like price action um, with inside like Bollinger Bands. Um, the red and green lines indicate your price action, and the blue lines indicate volatility bands. The yellow um, is like the overall sentiment in the market, basically. And then you also have your different levels that comes pre-done with the indicator. So the levels themselves are 32, 50, and 68 and stuff. And I'm going to go over how powerful those levels can be as well. In the video. The secondary main indicator, other than the super scalper that gives you the actual signals, is the advanced killer stochastic indicator, which is this one right here. This one comes with four levels: a 10, 20, and a 70 and 80. As of course, as I'm sure you can imagine, the two lower ones are your maximum support areas, and the two higher ones are the maximum resistance areas. Okay, uh, they do come in handy as well, and we will be going through that in the video as well. On how I utilize them. Okay, so let's go ahead and get into it. So let's say I get a selling signal from the super scalper. And we'll go here, and I'm going to be going over pound JPY a little bit, and then I'll switch over to the USD JPY pair so you can see a little bit of everything that I'm talking about. But again, let's say you get a sell signal here. Okay, now once I get a sell signal, there's quite a few factors that I'll look into each and every single time. And normally, once you get used to the template, you'll be able to tell it within like 5 seconds. Okay, um, but even if it takes you a little bit longer, just to make sure that you're fully comprehending everything correctly, that's fine too. There's nothing saying that just because I may be able to look at it and tell it within 15 seconds, it may take you 30 seconds. It may take you a minute. Who knows? But that is something that I don't want you to have in the back of your mind, like, oh, I need to be able to understand this within 5 seconds. No, that's not what I'm saying. I'm just saying that, you know, once you get used to the template, it won't take you any time at all to figure it out, and to sit there and constantly be like worrying, like, oh, should I get in, should I not, so on and so forth. Okay, so anyway, the way I personally look at this is, again, let's say I get the selling signal, I'll look at what price action is in relation to the MBFX system. That system, if you're not aware, is this trend indicator. That's the two red lines, the two yellow lines, the blue line in the middle, and then the two lower green lines. It's basically very similar to the trend indicator that a lot of you are used to, but I do like this one a lot better. It's more in line with price action versus trying to predict where the price action will go. The other reason why I like it is because I like the other trend indicator. I can use this one on any color background that I want, and it won't look all messed up if I use it on anything other than black. Okay, black. A lot of people just use black for the simple fact is that black, whether it's on your computer or your mobile phone, a black background is very easy to read all the indicators, no matter how many you have, as well as not too bright on your eyes. So whether you're looking at it in the middle of the night for a quick minute, or you're looking at it during the day, it's very unhurtful to your eyes, basically. Okay, but you can use whatever color background you want, and if you don't know how to change that, right click, go to properties, and then where it says background, you can choose any color background that you want. Okay. Me personally, I just always use black. Occasionally, I've used white backgrounds, but black is just where it's all at, basically. Okay. But again, you can use whatever color you want to. Okay. So again, I look at the price action where it's in relation to the BFX system. I'll look at it on how close it is to the upper or lower areas of the PB channel, and with the super dots. But sometimes the super dots won't be there, and that's totally fine. And I also look at it to see if I have um, to see what was the thing before, as far as the resistance or the support bars or the scissors. In this case, it was a support bar, but even if it's scissors or whatever, I do look for that. But now, like, say for instance, if I get this sell signal, obviously there is no resistance bar here, but there is one here. That's what I'm getting at. Okay. In addition to all that, right here, I also look at the TDI indicator. Okay. Now, the main thing that I'm looking at the TDI indicator is, let's say you go straight down. Okay. The red and green lines are indicating price action. Okay. So with this, what you're looking up for is, for sell signals, you're wanting the green line to be below the red line. For buying signals, you're wanting the green line to be above the red line. Okay. And you want them a decent distance apart from each other. Okay. Now, what I mean by decent distance, I mean enough to know that you can easily tell that the green is above the red or below the red. Okay. That's all that really means. Okay. That you can actually see some black in between them. Okay. Or blue, green, whatever color you're using for the background. Okay. So on any account, in this case, I look straight down. I do see the green below the red, which is a nice indicator to me that that it's doing that. Okay. So with that being said, I also look below that too, and I see what color the stochastic indicator is, and which way it's going. So in this case, the stochastic, like I said, is this one, and it's red pointing downward. Okay. All that tells me, and boom, I can get into me a sell trade. Okay. Now you can't help if you start going down into profit, then it starts coming back up, and you go out into the negative a little bit. Just keep an eye on it, and as long as all the indicators are still telling you the same thing, it's okay to have a little drawback. Okay. There are people out there, there are systems out there that may be able to teach you with no drawback whatsoever, but drawback is going to happen. Okay. You know, depending on your trade, it may never happen during the trade, or it may happen. Okay. But the bottom line is that drawback, as long as it does not continue into a drawback, then you're fine. Okay, as long as you have the account balance to cover that negative for whatever period of time. Okay, so in this case, I get into it, and if I write it all the way down, which I'll go over a little bit of that in a minute, I can make a maximum of, let's just say, like 80 pips. Okay, 85 pips, and that's a pretty good decent ride right there, ladies and gentlemen. Okay, so now I just went over what I look at to get into a sell trade. Okay, now how do I get to know if I can stay in that sell trade? Okay, well, some cases it's going to be immediate to know that you can stay in it for a while. Other times, not so much. Now, in this case, price action came down and bolted up, and then came back down again. Okay, it wasn't until the second leg that you knew that you're definitely going into a downtrend for quite, a few hours or so. Okay, now how you can easily know that is when the green and the red are touching the yellow middle line and then going below that. Okay, that's a clear indication that you are indeed going into a downtrend. Now, another way you can minimize your drawdown on trading is very simple. And the way to do that is what I literally just showed you with the red and green line going below the yellow line. What you do is if you get a sell trade here and you see it's still above the yellow line, you can hold off on it for right now, okay? You get a buy signal. Nope, nothing good for a buy because it's still right here. So then you wait for a sell signal, and then boom, the yellow and green line are below the yellow line. So then boom, you can get into it, and look at that. You would have had no drawdown because look, if you got in right in there, yeah, that came up, but you're still in profit, and then just kept shooting down. And look, you're still making about 80 pips. Okay, so either way you look at it, you could have waited until these two lines were touching or below the yellow line, and then boom, get into a sell trade. And again, it's not even foolproof. I want you to understand that it is not foolproof. You could still have drawdown because the market depends on the people buying or selling. So, with that being said, if you're in the selling market, then all of a sudden you get a bunch of buyers coming and they start buying, 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 buying. It could try to draw up the market something. That's where that drawback comes from, okay? But, like I said, it's not the end of the world, okay? The market helps you to know whether you're going into a downtrend or going into an uptrend, and or whether it's short term, long term, whatever, and helps you. Okay, so you don't have to fear that if and when it happens. Okay, so any account, but that is how you can like very minimize the risk of that is waiting for those lines to actually be touching or below the yellow line. Then you're just better off on that. Okay. Now, the way to know that you can keep staying in a downtrend is you would just simply wait until these lines crisscross back over the yellow lines, and then uh, you know, and the way you know that is you would wait for a buying signal. When you get a buying signal and they were touching or above the yellow line, then you could go ahead and get out and take whatever profit you had. Okay. Now, if you're like, well, George, like I see this price. It came down and started touching the PB channel and these other areas, but look, I mean, like it literally dropped down like another 35 pips and everything. And that is one thing, guys. Like I said, you're looking at the stochastic and this. Okay, so you still see this green line, how it's severely below the red line right there, and how you're underneath the yellow line. You're still in the downtrend, so you can still get in it, but just as soon as you can, start moving a take profit stop loss as much as possible, or get into it and then just take it at 10 or 20 pips, grab it, and then just wait for that reversal for that buy trend to come in, and then get into that buy trade, and then you'll be just fine, and you wouldn't have to worry about nothing. Okay. Now, my rules for buying is very similar to what it is for selling. Okay. For buying, you get in the buying signal. You're looking to see where price action is in relation to the PB channel, and where it's in relation to, with a green dot. Like I say, if you have one, great. If not, that's not a problem. The bigger key factor is to see where the green and red lines are. In this case, the green is definitely above the red. They're right there at the yellow line and crossing it, and you got blue stochastic coming up. So in this case, I could get into a buying trend, right? Now with this, I could hold this until I get a selling trend, a trend notification for sell, and then these red and green lines are back at touching or below the yellow line, and the green is definitely below the red, then I could get out then. So like if I got in now, which this would have been on this past Friday, I could actually still be in this buying trade and still be up like 52 pips right now on my trade. Okay, and I could just still be riding it. Okay, so that is some key factors on what to do for that, on what to look out for as far as getting in and getting out, and how to know if you can stay in or out. Okay, now the other thing too, ladies and gentlemen, let's say you get the sell and you see the price action coming here. Okay, now let's say you got this sell trade and you're like, okay, well the green is definitely not below the red enough, because I really don't see any black in between it. So what you can do, you can wait it out. Then you see right here at the very tipping point how the green was below the red, and it's like right there at the yellow. Well, then if you look, the stochastic is already down there. It's touching the 20 level, which is the first indication of sold, right? So with that, you just watch it. You can put a take profit stop loss up here. So if it came down too much, you could just take it out and then get back into it again. Or you could wait until these lines are definitely below the yellow and then take out whatever profit you have. Now, if you did get stopped out or you took it out manually, when you got another buying signal, you just look at it again. You see the green is above the red. They're both above the yellow, and you got a blue stochastic going back up. Then just get into another buying trade, and look, I would have already been up, 15 and a half pips again. So that's how you can play the game here and there. Depending on your personal individual trading style. Okay. Uh, Now in these cases right here, I always tell you trade in direction of the trend. Um, like I said, there's all different kinds of trends. You just have to be careful which one you're going to do. Okay, and if you're going to trade against the main trend, but let's say you want to try to get into this right here. Okay, so I give me a buying signal here, right? Now, even though this is in good levels of support right here to bounce off to go in the opposite direction, I still want a few things to happen. Okay, it doesn't have to be right there, but somewhere back in here. Okay, I need scissors or I need a support bar, and hopefully maybe a green dot. Well, that's not anything right here. Okay, plus if I look at it, yeah, the green is above the red a little bit, going towards the blue, but I mean, it hasn't really crossed the blue yet, or I mean, it hasn't really crossed the yellow yet, nor is it really close to the yellow. And even though stochastic is blue going upwards, still doesn't mean nothing. Okay, so I can let this play out. I give me a sell signal. I already know that's bogus. I'm not going to get into that because it's right here in the maximum levels of support. So then I wait for another buying signal. Now with this buying signal, I saw stochastic going upwards. I had the green above the red, and it's definitely going to be going up and touching the yellow and surpassing it. Now you can immediately get in here and go and bank money, or if you want, just simply wait until the lines, one or both are above the yellow, and then you can get in at that point and take your buy trade, and then you can wait. Okay, you can wait for these lines to crisscross back over, or you could take profit up here somewhere. However you want to do it. Now, me, if I did this personally, I would buy into here, and then I would take it up in here. And the reason for it is because when I got my sell trade here, I got dot, I got resistance bar, and the green is significantly above the red. Going to go down. Stochastic is going down. So I mean, I definitely would exit right here, to be honest. Um, but like I said, you can easily wait until these lines are below, and then you would have been exiting right here. The only thing is, you were taking a huge risk right in here on losing out on some good money. Okay, so again, everyone has their different ways of doing it. None are bad, none are right. It's just how you want to do it yourself. Okay. Now for the sell trade, again, here's a good one. Sell signal comes up. Green is below the red, going from upper volatility bands to lower ones. Red stochastic, green and red are going to go through the yellow. Boom, I get into my sell trade here. And like I said, a lot of these trades will be with no drawback. Some will be, it just depends on price action. But in here, I would have made like 30 something pips and it would have been bad. Okay. Now, look, in addition to all of this, another way you can tell if you're going into downward markets or upward markets is look at where the lines are, the volatility bands and the price action lines and the sentiment line is in relation to the three levels, the 32, 50, and 68. Okay? It will not always happen, but eventually it will happen to where the price action has to go from 32 to 68, 68 to 32, okay? Or it could go from 32 to 50 and ride that for a little bit and then go to 68, or to where it goes from 68 to 50 and rides that for a little bit and then goes to 32 or whatever, okay? Different scenarios, but the main thing is these three lines are some of your primary um, thank you, Georgia. Some of your primary, like Fibonacci levels, if you want to look at it like that, okay? And I'm going to go over some examples with you in just a minute, okay? So as you can see here, I got my selling signal here. I can look straight down, and I see price action came up, and at this point touched the 68 level, came down a little bit, came back up, came down, came up, and now everything is telling me that it's indeed going to go from the 68 level down to either like the 50 level or even all the way down to the 32 level. But I know it's going into a downward market at period, so that's why I would get into that sell trade. Now look, see what I'm talking about right here. Prime example, it went from 68 level down to 50, a little bit below the 50, then shot up to 50 to 68, then went all the way down to 32, came up to 50, staying just a bit above 50, and now it's going up to the 68. So, like I said, it doesn't always happen to where it immediately goes from 32 to 68, 68 to 32, but it eventually does happen. And with that being said, this indicator, out of all of them, I mean, I love all these indicators right here, but this is one of the best ones I've come across in all my many years, which has only been like, what, two or three. But anyway, it's been one of the best ones I liked in training because it really helps you to figure out and find out where the market is going. And I'm going to be going over this in just a minute, but it also helps you to really know which way the market is going to go in a consolidated or flat market. Okay, and you're going to see that what I'm talking about in just a minute. Okay, so again, I get a buying signal. Uh, I can't show you any more than the NBFX, but you get the rough idea. But anyway, with the price action, it's coming up off the PB channel, green dot, support, and then my main things is the price action lines. Green is good above the red, going through the yellow, uh, blue stochastic. So boom, I get into my buying trade, right? And this one alone, you would have made like 80 to 90 pips, depending on where you got in and out. But 80 or 90 pips, I mean, that's pretty damn good. And that's just one trade. If you did like what I do sometimes and stack like 4 to 6 trades on top of one another, you'd be looking at a lot. Okay, so let me do it this way real quick. Okay, accessories, calculator. Let's say you get an 80 pips, and let's say you put in say 5 trades. Okay, that's 400 points, which is no. I'm sorry. That would have been. Oh, thank you. That would have been. Yeah, let me redo that. I'm going by pips. Okay, yeah, so 800 points, keep that in mind. 800 points is 80 pips, right? 800 points is 80 pips. So 80 pips times 5 trades, you would have 400 pips right there. You know how some people post on Facebook and say, "Oh, I made 700 pips this week?" You can make 400 pips alone just off of this by doing 5 trades stacked on top of one another and getting, roughly 80 pips per trade times 4 or 5. I mean, that had been 400 pips just off of that one alone. You know what I'm saying? So where most people are getting just a 700 or 500 or 600 or 1,000 or whatever in one week, you can literally get that in 1 to 2 days just by off of one trade. Okay. Uh, Again, here sell signal dot. My main super dot is all the way over here, but dot. resistance, and I look and my green is below the red. The green is already touching the yellow. If I want, I can wait until I'm down here where they're both, below the yellow, and then I can get into my sell trade again with no drawdown, or I can get up here, seeing how far away and where they're going. It doesn't matter. But also, here's another prime example. Um, Give me 1 second, guys. I apologize. I was reading something on my phone. Where was I at? Okay, so anyway, um, this goes to prove what I was showing you earlier. See how price action went from 32 up to 50, climbed a little bit above the 50, and now it's coming back down to the 32 level. Like I said, that's fine. They're like Fibonacci levels in a way. I mean, they're not actual Fibonacci levels, but that's how you can look at them. Because with Fibonacci levels, you're going up to a certain point, and either you're surpassing it or you're coming back down to the lower point or the higher point, depending on how the market is. So it's kind of like that, okay? But anyway, it came up this way and then it stopped because, the blue volatility band was right here, right? So again, like I said, price action is here. I know this is a good selling point because I look down. Excuse me, I'm sorry. So anyway, I do realize this is that this right here is a good selling point because I can look downward. I can see the green below the red. And it coming away from the upper areas of the PB channel and stuff. And since this is significantly below the red, I know it's going to go from the 50 level down to the 22 level, or somewhere down past the 50 level is all I'm really concerned about. So I can get in and boom, look, I just got another, 80 some pips. So again, that's four. That if I do a second five, for instance, um, you know, this right here. What is it? This right here is on the 27th of September, and so I get on the 27th of September, and then I can get on this one also on the 27th of September. So they're like hours apart. So in other words, 8 plus 8. No, I'm sorry, 400. I don't even need a calculator for that. Anyway, so just between these two trades right here, that's 800 pips. Okay, 800 pips. Okay, so it's 80 pips this way, 80 pips this way, but you do that by five. So 5 times 8 is 40. But the points. So it's 800 points and 800 points. So it's 80 pips. One way and two ways. So to do that by 40, that's so instead of 80 pips here, it's actually 400. Well, wait a minute. I'm confusing myself. Hold on, guys. Okay, so anyway, so you got the 80 pips because we're not talking about points, but you got the 80 pips times five. Yeah, so it's the 400 pips this way, 400 pips that way, 800 pips total. So in one day you can have 800 pips by going up and down. Now, granted, not every day is going to be like this, guys. You might get in a trade just like this right here where it might only equal out 30 pips, okay? So it's not a guarantee, but the point is that I'm making is where all these other people are making under 100, under a thousand pips a week, you could easily get close to 1,000 pips just in two trades, five stacking and whatever. Now, granted, I'm not suggesting you stack five trades on top of one another until your account gets high enough, but I'm just giving you a rough idea on what you could do. Okay. Now, those same people that do all that, those are people that most of them are doing one or two trades at a time. They're not stacking like four, five, six, seven, eight trades on top of each other. Okay. But anyway, I just want to give you a very quick example on that. Okay. Now, those of you who want to uh, do the shorthanded, um, the reversals on the trends and not follow trend to trend, the easier way to do that is with the TDI indicator. Okay, so I give me a buy signal here. I got the scissors to indicate a reversal in trend. I get a green dot, so that also helps me to know price action is going to be reversing. I'll look at my price action lines, Green is above the red, going up towards the yellow line. Okay, going up towards it. Not that it's touched it, but it's going up towards it. Okay, so it's going up towards it, and it's coming up off the 32 level, up towards the 50 level, and from the lower volatility band to the higher volatility band. So that's how I know that my chances for this are good, but I wouldn't recommend doing this. But you could, and then just take profit somewhere up in here, and make whatever you want to make. I like trading in the direction of the trend because at least that way, I'm a lot more confident that I'm gonna make a lot more money, a lot more pips. But I'm just giving you some quick examples on how you can determine for yourself if you can maybe safely get into it or not. Okay. So after I've gone over this, I'm gonna go over here to USDJPY. Okay, now with this, I want to talk a little bit because this actual currency has a few flatliners in it, a few consolidation points in it. So I want to go over that real fast. Um, the first one is actually right here. If you're not sure what consolidation or flatline market is, it's this right here. Okay, or similar. Okay, it's where the price action candlesticks are basically um, not that far up or below the one prior to it. Okay, this is what you consider flatlined or consolidation. Okay, versus market that's going up or market that's going down, it's flatlining. Okay, now there's a couple different ways you can figure out which way the market might be going or not going. Okay, um, as you all know, price action will go from upper to lower, lower to upper. Okay, that's one way. Then this way, it would have been easy to tell because you were going from this upper way down to this lower way, but then you could tell that it never really got you into profit. Okay, so even though this was up very high and came down like way above the 68 level and to come down to eventually the 32 level, um, the point is let's say I got into here, wherever, and I mean eventually we got into some profit, somewhere. Um, but what you have to do in these cases is look at the overall, like the overall trend method or whatever. But in some of these cases, especially with the flatlining, like it is right here, and you can tell that this is really going up, it's not always the best idea to get deal with the flatline market. A lot of times, what you want to do in certain situations, I mean, I can't tell you what this all looked like back in here, but a lot of times, what you want to do is wait to see which way the market is going to be going, and before you actually get into it. Um, Flatline and consolidation markets, they're very tricky to figure it out. Um, the template here can really help out a lot, but sometimes, you know, it's really a judgment call on what you got to do. Okay, so that's that one. I'm gonna show you another one that would have been easier to predict. Okay, but I gotta go back in time for a little bit. Okay, guys, I paused the video for just for a few minutes because I was trying to find another example of consolidation, and like I said, some will definitely be a lot easier to predict and determine than others will be. Um, Anyway, going back to this real quick, and one thing you could determine which way this might go is by the support and resistance indicator. As you can see here, this was a support one, then this was a scissor one. So unless the scissor would go to a resistance, then you know it's a short reversal, and then you get the support. So that's one way you can know that if you place a buy trade, eventually you are going to go into, the buying market. But like I said, with flat lines, sometimes you can tell easily, even with the TDI, and other times you cannot, because this was showing the market decreasing as the TDI was showing it was decreasing, and then it went up. But like I said, it's one of those cases where you just have to decide for yourself sometimes what to do and not to do. Now, in other cases like this, it's a lot easier to determine how the market is going to be playing out. Okay, so I'm going to show you what I'm talking about. Again, this is another example of a flat or trending market where the candles are very not too tall and not too high than the one previous to it. Okay. Now, in some situations like this, the TDI indicator can clearly tell you which way the market will, definitely be going back upwards. Okay. As you can see here, the market was a good ways below the 32, so we know that eventually it was going to be going back up to the 68, which eventually did go up, very well. It ended up going to a little over 100 pips, uh, in the upward direction on this setup and everything. And the TDI can help you to determine that. Sometimes, like I said, it doesn't always work real great. That's why a lot of people will tell you, and I will too, not to trade a consolidated market, um, because some of them will lead into a really great profit for you, and others will not, as we saw, right here. Okay. You would have gotten very little pippage for your time because the market is just continuously increasing. And this is also one of those times when you've got to look at your indicators to see how strong or weak the market is to also help you determine. Okay. Now, another reason why I would feel confident, one reason why I would feel confident in this one going into the upward direction, at some point I would just monitor it, even if I only took 10 or 20 pips out of here, is because price action lines are above the yellow sentiment line and going into the upward direction upwards towards the 68 line. Okay. Um, so yeah, even though the volatility band is right in here and touching it quite often and stuff, I'm looking at the overall picture that it's all gonna move back up to the 68 line eventually. Okay, so that's what I'm saying. Like you could get in anywhere you wanted to in here. Once these lines are above, you know you're in an upward market, and that's how price is going to act for you. It's going to an upward market, and then you just get set it to whatever you wanted to. In this case, like I say, even if you got into a down trade, even though this was indicating a downward market and all that, obviously it didn't work out, and unless you took it out, unless you kept watching it really closely and taking it out when you got a little bit of profit, uh, you would have definitely gotten a loss in here. Okay, so that's why I said it really depends on the pair. It really depends on the market conditions and all that. Um, because see, even though this whole right area right here is kind of okay, I don't know where that was going. Even though this whole entire area is in a way kind of consolidation, even though this did come up and come back down a bit. Um, if you can see it, this is all kind of like flatline right in here. In a way, again, you have that spike, but for the most part, it's all consolidated. But as you can see, what we get you is by looking at the TDI indicator, going from very high levels above the 68 to come all the way back down to the 32 to come back up to the 68. Okay, so like I said, you can choose whether you want to do flat market or not. Uh, what I honestly would suggest in some cases is, especially if it's back in here, simply wait until you get a pair of scissors or you get a support or resistance bar for flat markets, just to help to determine which way it's going to go. You know what I'm saying? That is one way. The other way is just to let the flat market play it out. If you don't feel comfortable, let the flat market play out, and then once you do feel confident in which way it's going, they go ahead and get in that trade and take it off. Okay. But anyway, this video is a lot shorter than the other one I did because the other one was like an hour and 7 minutes, and this one's about a little over 39 minutes. So anyway, I hope that answers a lot of your questions. I'm going to be looking to doing some hopeful signals here soon in the very near future. That way, everyone can benefit from it and start racking in some good money and whatnot. For Christmas and stuff. But if you have any questions, let me know. Here is the list that I promised of the exact indicators that I'm using right now with the system. Like I said, I deleted the one, but the rest of them should be the same as what you already have for writing the trend template. If not, you just see which ones I'll let you can add them. Uh, the only depending on what you're adding, the only numbers to look out for is with the stochastic. I'm using indication of 13 for the K period, and everything else is pretty much exactly how it is. Now, one last thing too, if you're still not 100% sure with the TDI indicator, uh, I don't really use this anymore at all. Period. Uh, but it can help you with the TDI indicator if you want. Um, it's added the solar windjoy. I would just recommend the windjoy itself, not the Renko Signal AM indicator. Um, but this way it can help you to determine. I would just use this straight out of the box with the 35 instead of the 10 that I've shown you on the past, just the 35. And but basically with this is as you can see here, you got a bystander here. This would already been significantly above the red and going upwards, and it can help you to know if you can stay in or if it's getting weak and trying to fall down into the opposite method. If you want to add the solar wind joy as an additional confirmation to everything else, you can. But like I said, in some cases, like here, that would have been blue. But like I said before, you really don't need the solar wind joy because even though the solar wind joy would have been like, no, I'm still in an upward trend, don't do anything. Like I said, when you have it like this and it's all the way like this, you could definitely get into a sell trade. Or if you want to wait for the lines to crisscross, then you could just go ahead and wait for the lines to crisscross and then get into your sell trade or buy trade. So it's just like I said though. You can utilize this. You don't have to utilize this. It's whatever. I'm merely just throwing this out there as well. So if you want a little extra confirmation with the TDI, it can help you. But like I said, I personally just don't really use it on mine. But on any count, that's a personal choice whether you want to or not. But all I have is all of this that you see minus the solar wind joy, and it works. Okay, you follow the rules, follow exactly how I showed you. It works good. And like I said, what I'm going to try and start doing here real soon is to do signals. And if possible, when I do signals, I will try and take screenshots of what my screen looks like so you see exactly what I'm seeing when I'm taking the trade. Okay. All right, guys. If you have any questions, put them in the group. I'll get to you. And take it easy.